Loved your note, by the way, always a must-read over the weekend. And you kind of, it seemed to me, correct me if I'm wrong, threw a little cold water also on some of these big tech earnings. Effectively, and I'm going to paraphrase you, good, not great, but yet the market continues to rise. What gives?
Morning, Brian. Yeah, it definitely is a call about, like, on the one hand, really bearish views, like on the margins for these companies. But then the market has continued to love these tech names with inflows in ETFs and, actually positioning in options or any kind of sort of technical positioning that seems to indicate that people are willing to buy dips in these tech names. So, it is a big week, as you mentioned, because it's a big weight in the index. And still, the revenues that they're going to generate on average will be year on year like 30%. So it's pretty significant. And therefore, the bull case underlying the tech sector hasn't, I think, really changed. But there's some negativity building around as you let in with the segment. If you think about a company like Facebook. So I do think that the earnings will put a little bit of pressure intraday on the markets. But overall, this is still a very bull trend for that sector.
Okay, so I know we like to lump big tech in together, but we talk about the FANG stocks and kind of there's all these ETFs that just throw them into a basket and let people figure it out. But as you point out, they are very different. And we like to talk about two things here on CNBC, big tech and supply chain woes. They go together in some ways. A Facebook, a Google, I don't think they care at all about supply chains. Maybe Google for its data centers. An Apple, they do. They build stuff. They need semiconductors. There is a risk, right, that these stocks go in different directions because let's be clear, they face different things, different risks.
They do, and I think it's a really important point that you're making because if you look at what happened with Snap last week, it wasn't just its advertising issues with Apple, but really was the supply chain effect of its advertisers that affected its revenues. I think that woke up the markets to, okay, there's something else going on here underneath that we should pay attention to, because if you're now getting like companies that have not much to do with anything of supply chain suddenly get affected by stories out of the supply chain, I think that's notable. And yes, tech is also sensitive. Because if you think about hardware or you think about IT, those sectors are indeed really sensitive to the supply chain. And yes, the earnings that are estimated for that are to be decelerating by analyst estimates. I do think that the call is right. But there's a whole lot of other ones that are not affected by that, which I think why the supply chain there doesn't matter too much.
Like quickly, like what?
Well, if you think about the big mainframe, Oracle or Qualcomm or Broadcom, that type of companies, they're not so affected by that supply chain story, either because they're not relying on inputs or components, or they don't have maybe what happened to a Snap, right, where they were affected indirectly. That's just bigger technology names are in demand really because of our economy being more and more digitalized, as an example. So I think that's a good group that you can think of that's somewhat independent of the supply chain developments.